respectful of everybody's time. My name is Gigi Pedraza. I am the Executive Director of the Latino Community Fund. It is a pleasure to having you all join us this morning. We have around 18 organizations joining us, all in their majority immigrant-led, Latino-led, or people of color-led. So it is challenging, but also an exciting time because this is when we see this solidarity space, this sisterhood and brotherhood between organizations, and it is only in that space that we are able to better serve our communities. So again, welcome everybody. Thank you for taking the time to joining us today. I will go ahead and share my screen and start, let's see, accepting more people are joining us. I am going to share my screen in a few minutes and walk you through, the expectation of this call, which is really to clarify what are the options available to small nonprofits, as well as hopefully answer your questions and explain the process of the payroll protection option, which is really what is pressing at this time, as there is a limited pool of money. So I will go ahead and share my screen. Bear with me. Let's see. Okay, you all see my screen? Yes?
Yes.
Excellent. Now, let me admit a couple more people. Okay, so this is our workshop today, understanding the PPP opportunities and challenges. And so I will go ahead and, okay, my screen just froze. So this is our agenda. We are going to compare a couple of the options available. We are going to go through the summary and the details of the PPP. And we are also going to go through the documentation needed. Keeping in mind the documentation may change based on your financial institution. And then we are going to go through the process and then open for Q&A. I will introduce our speakers this morning. I will start with Maria Peck. Maria, and I will make sure I read, I have the bias here. Maria Peck, or Maite, she is a successful business owner and principal of She Lends, supporting and securing capital needs for small business owners. She is also a principal and co-owner of Mark of the Potter, a pottery shop and studio. And she is also the principal and co-owner of a construction and roofing company. Maria has over 15 years of experience in the sales and access to capital sectors. She previously owned the well-known restaurant Sweet Devil Moon. She served as the founding director for the Small Business Administration ACE Women Business Center and was the director of Hispanic Strategies and Lending for ACE and the LIFT Fund. She is also our board chair. Thank you, Maite, for joining us today. And then Lilian Rodriguez Lopez. Lilian is a government relations and community and communications consultant with both corporate and nonprofit clients, including CCI companies, a business-owned food and beverage leading business, and the Hispanic Federation, a leading nonprofit organization in the country. Previously, she was a vice president for the Coca-Cola Company and was the president and CEO of the Hispanic Federation with over 100 member organizations. Lilian was elected the chair of the National Hispanic Leadership Agenda, and it is the chair of La Amistad and the vice chair of the Latino Community Fund. So thank you so much, Lilian and Maite, for joining us. I'm gonna take a second here to accept more people that have joined us. So give me 1 second. I have to admit more people are joining us today. Okay. I think that's all. Great. So this is our agenda. These are our speakers. And so what I will do is I will unmute Maite, Maria Vinces, and Lilian to make sure that they can go through all the documentation and materials that we have prepared for you. At the end of the comparison, we're going to start with a comparison of options. We are going to open briefly for questions. You are welcome to also ask questions in Spanish. And then we will go through the nuts and bolts of the PPP. Lillian is going to lead us through that. And then again, we will provide some resources and open up for questions. So that is the process. We have more people that are joining us today. So hello, everybody. If you just joined us, my name is Gigi Pedraza, Executive Director of the Latino Community Fund. What you see is our agenda for today. We have Maria Vinces and Lilian Rodriguez Lopez joining us and lead us through the comparison of options for small nonprofits and the nuts and bolts of the PPP. We will begin, and we have more people joining us. Okay. Excellent. We have around 24 people joining us today. Okay, let's see if we can move on. So this is a disclaimer. You should all know that, of course, we are not attorneys or financial advisors. The information that we are presenting to you is based on the federal and state agency rules and regulations. It is updated as of yesterday evening. So this morning, Lillian and Maite sent me additional information, and this is an updated presentation. We do recommend, because rules and information and process oftentimes changes, to please verify with the SBA and with your financial institution before applying, if you will consider applying. So I will now go ahead and unmute Maite, because she can join us to detail and the comparisons between the Paycheck Protection Program and the SBA Economic Injury Disaster Loan. Maite.
Thank you, Gigi, and thank you everyone for joining us today. This is an important call as things are evolving currently for all of us during this critical time. This information, of course, as Gigi mentioned, is going to be moving and changing in the next few days and so on, as we learn more from the SBA and the Treasury. My job today for this presentation is to provide you a comparison, like you see right here on this slide in front of you. This is just a simplified format to understand exactly what's available per the March 27th, the CARES Act was signed into law. And through the CARES Act, they have provided 2 disaster relief funds. One is called the Paycheck Protection Program, which will be referred to as the PPP loan, and the SBA Economic Injury Disaster Loan. Both of them, of these products, are available for nonprofits. This is new. This is something new for the SBA, but this is to support the need during this crisis. So the Paycheck Protection Program, it is available for nonprofits, like I mentioned. It is available through your financial institution. That is going to be the main difference between the Paycheck Protection Program, the PPP, and the SBA Economic Injury Disaster Loan, which is only available through the SBA. The Payroll Protection Program, the PPP, is money allowed for employee retention for payroll expenses, including the benefits, also for mortgage interest, for rent and utilities. This money is to retain employees through the period of February 15 and June 30th. What they're trying to avoid is a massive layoff, of course, and these funds will help retain employees in the businesses or in the nonprofits. How much can you borrow through the PPP program? You will borrow, the money allowed to borrow through the PPP program depends on your payroll. So it depends on what you file on your 941 form. They will take the last 12 months of payroll, average the amount, and multiply it by 2.5. And that's what you will qualify for. Gigi has included in this presentation a calculation sheet and also a calculator from Forbes. Use that. How much of interest will they charge you for the Paycheck Protection Program? It's 1%, and you won't have to pay anything for the first 6 months. So this has changed. This 1% started at 4, it changed to 0.5, and now it's at 1. That's why we say, you know, be sure to read the latest information because it's evolving as we speak. With the disaster, with the SBA economic injury disaster loans, you can use the funds for payroll as well, but you can also use the funds for fixed debt or accounts payable or other operational costs. You can get up to $2 million, and there is a $10,000 advance opportunity, which also has changed. Now it's only $1,000 per employee. It's supposed to be funded within 3 days. Right now, we have not learned of any cases that have been funded for this $10,000, just to be absolutely clear and upfront. But the money is available if you're going to apply for the economic injury disaster loan, which can only be done through the SBA.gov website. What is the interest rate for this economic injury disaster loan? For nonprofits, it's a small 2.75%, and no repayment will be needed in the first 12 months, and you have up to 30 years to repay this loan. So this is important information, and this is basically the comparison side by side of these two products. Today, we're really going to dive in the PPP product, which Lillian will speak about in depth later. But that's it pretty much for this comparison. Any questions?
Okay.
Or do you want to leave the questions for after Lillian's portion?
Yes, we're going to open for questions after we share the resources that we have available. You know, and so it's going to be a small period to answer questions, you know, of differences between these two opportunities. And then we will go through the nuts and bolts of the PPP.
Got it.
So let's see. Questions? Okay, my screen is going back and forth. So these are the resources that we have available. You will all receive a copy of this presentation. They are all hyperlinked. So we are providing a hyperlink to the EIDL, the disaster loan application. Again, this is a simple application, and if you submit it, you will qualify for the 10,000 advance. And then we are providing all the PPP resources, again, hyperlinked with the sample application form, noting that you may have, you know, a different way to apply through your financial institution, likely digital, and it may look slightly different. But this is the sample form that we have hyperlinked. We have a payroll calculator by Ford, and then a spreadsheet. A sheet that you literally can just plug in numbers, as well as other materials on the drive. We are also happy to share a guide, detailed guide on the federal relief programs by the Hispanic Federation that Lillian here helped us put together. And we're also sharing Maite's email. She's been very generous in offering support to any of you that have any specific questions on the PPP. She can provide you with support. That's her email there. So we will now move on. Let's see if we have any questions. We do have in the chat box, I see a question. Lauda is asking if the rent under uses is just for commercial rent, or can that be used for your primary residence? I don't know if Lil or Maite are able to answer that question, and I am assuming it's for both.
I'm not exactly clear, but if the residence is used for business, I would assume that a portion of that rent could be, but I cannot say for sure because I have not come up with that particular scenario yet. But I can ask the bank. Mm-hmm. Lillian, do you have any information on that?
Since we're focused on sort of the nonprofit piece of this, which is very different from the way a small business might be functioning its business, is is the organization, is the nonprofit housed out of the home?
So I think the answer to that is going to be that yes, there are a lot of nonprofits that are housed in homes as well as sole proprietorship small businesses.
So then I think it's going to be a complicated equation, because when you think about small business tax implications for how you write off an at-home business or even functioning the nonprofit, it is either a dollar amount or a very small percentage. So that's going to be a difficult equation to be able to submit to the bank and have the bank do it, unless you were already doing that on your tax forms.
I also want to point out something here is that you're really not getting that much funding. The funding is based on the average monthly payroll times 2.5. Really, the bulk of the money, because the large portion of this loan is going to be forgiven, you want to use it for employee retention and payroll cost. But I just got the answer from the bank. The definite answer is no. You cannot use the home, the cost of your mortgage on this loan.
But what if as a nonprofit and you pay rent for your office space?
Yes, that qualifies.
Okay.
You probably want to go through the deeper dive on some of the specificity of the PPP program before you get fully into the questions, because I think a lot of that stuff, Mike and I can answer as we go through these pages, because all of that is wrapped into sort of the application and, you know, the lender role in filing. And there is a relationship between the EIDC grant and whether or not you apply for that, you receive the advance, and how you reflect that on the PPP. Mm-hmm. Because it does get reflected on your PPP application if you apply for the economic injury disaster loan.
Correct. Okay, so go to the next one. So Lillian, nuts and bolts.
So first, a couple of things, and some of this has been covered in the other pieces. Yes, it's a 2-year term. You have a 6-month deferral for the payment. The reason why it's a 2-year term is when you apply for the loan forgiveness, you cannot assume that every single thing that well, let me back up a little bit. When you apply, you're being allowed to give 4 general categories. And Mike, they already mentioned, it is payroll and benefits. In the payroll and benefits, it's the average of 12 months of payroll. Now, this may not be the case for anyone on the phone, but if you had an earner, any earners that were 100,000 and above, anything above 100,000 will not be matched. So that is your annual cap per employee, 100,000. Doesn't mean you're capped at 100,000 in payroll. It means you're capped at anybody earning over the 100. You got to take that amount out. So it's 12 months from the point of application. They do say from the point of application. So today we're in April, but a lot of people haven't closed their books yet for the month as a nonprofit. And again, I'm only focusing on nonprofit, not small business. So you probably want to use the period of March 1st, 2019 through March 1st of 2020, or if you have closed your books through the end of the month, you can do that too. So it's those 12 months. That's on the payroll side. There are some exceptions on the payroll side, and it's your employment taxes. So your Medicare, any paid leave, you have to take that out of your payroll costs. And there's a reason for that, because the federal government is already giving relief around certain other programs. So when I say I'm talking about your employment taxes that you pay, those have to be backed out. And there's a reason for that, because there's a serious amount of dollars going into unemployment and other kinds of programs. But you can get all that specificity in the guide that Gigi mentioned about what rolls out. of the payroll costs. You have that. You do have rent. So you also want to submit your rent times 2.5, 2.5 months, you can borrow that. You have your utilities, and those are your normal utilities, and there's the mortgage interest. If you own your building where you're housed, your nonprofit, you can borrow the mortgage interest, but you cannot prepay mortgage interest and you cannot prepay your mortgage. This is for rent. And that's why when Mike was explaining what the bank said, maybe you're not in a mortgaged property. Maybe you are in a rental property and you live there and run your nonprofit out of there. So you're paying rent, so it qualifies. But if you own your home and you're running your nonprofit, then no, because that's part of the principle of a mortgage payment. So that's the distinction. So now you have sort of the 4 basic areas, right? Payroll, the wages and benefits. You also have obviously mortgage interest, you have your rent, and you have your utilities. You're required to apply to a lender. The lender has to be an SBA lender. Here's the 2 things that are happening as it relates to the PPP, and it's not bad things that are happening. They're just things that are happening to change and strengthen the system. So the systems were overloaded by the lenders. They never expected the millions of applications to come in, 1. 2, when the applications come in, they have a very high level cost for the banks because of the assets that they require to cover the loans, even though they're guaranteed by SBA. And 3, there were a lot of questions. So as we speak, they are working to certify more lenders to be able to provide the SBA loans. That's happening on a national level. And obviously that's work that happens between Treasury, SBA, and actually the banks themselves. That's one thing. Tomorrow, the original amount under CARES was $349 billion. Tomorrow, they're hoping that Congress, the Senate and the House, the Senate will vote tomorrow, hopefully the House members on Friday, to increase the pool by $250 billion. Don't know that that's enough, but it will still open up a certain amount of aid to more organizations. And so those are 2 really important pieces that are happening. The expectation, and you have here that, how the loan is calculated, 12 months, you have a calculator. You have the costs that are not covered, including paid sick leave. Remember, there's all these benefits under paid sick leave and family medical leave. This loan has no collateral or personal guarantee required. You just have to have a good faith certification that you're going to use it based on, the economic conditions that are happening throughout the country. You do not have to show a revenue loss. You do not have to show a revenue loss as a nonprofit. That's not required to get the PPP. This loan, they are expecting that you're going to, use the funds over the course of the next 2.5 months, depending on when you get it. And it's available through June 30th. That's the difference between the PPP and the EIDL. And I want to just touch base on that. The EIDL is not a forgivable loan. The EIDL, you can apply for it through December 31st, 2020, but it will require, obviously, that if you apply for both of them, whatever you apply for under the EIDL that matches the 4 PPP categories. What do I mean by that? If 2 weeks ago, someone spoke to you and said, oh my God, I'm gonna apply for the EIDL. I wanna see if I can get the emergency advance. And you chose to also proceed with the EIDL application and apply for payroll costs. When you do your PPP application, you disclose that. If you apply for the EIDL up to the 10,000, you disclose that. It says it on the application. Are you seeking any other compensation? And it makes it on to your calculation. it's forgivable, but you still have to let the federal government know that you applied for that grant. And here's the good thing. If you did apply for EIDL in excess of the emergency advance, meaning you were proceeding with the application for some of those other costs that Mike then mentioned, you can wrap up any payroll costs, any rent, utilities, and anything else, you know, those 4 categories, mortgage, rent, utilities that you were going to try, mortgage interest that you were going to try to get through the EIDL. So I just want to highlight that because they are related. The EIDL doesn't have any personal guarantee up to 200,000. And you heard from Mike about PPP. You don't have, there's no guarantee. You're not putting up collateral. You don't put up your house, cars, bank accounts, anything like that. The EIDL, you are if you want to borrow up to 200,000. And then if you even want to borrow more under the EIDL, then you do in excess of 500. It does require collateral. As long as you have the permitted uses during the 8-week use of this loan, you can apply for forgiveness. Here's something that Mike alluded to. There is an equation here, my friends. You want whatever you apply under for the PPP, if you want loan forgiveness, 75% has to be directed to your payroll and benefit costs. 25% can be directed towards those other areas of mortgage interest, rent, and utilities. But 75% must be towards payroll costs. Why? Because this is a paycheck protection program. So the emphasis is, I'm going to give you these funds and I'm going to forgive them because you kept employees on payroll. Now, if you do have a reduction in staff for whatever reason, or you had a reduction in staff, here's the nice thing. If you don't plan on rehiring them, and I'm going to give you a scenario. Let's say you had 20 employees and you had 5 hourlies and you already let them go. Doesn't mean you can't apply. It just means that when you do apply and then you look for your loan forgiveness, based on the 20 employees you had last year and the 15 you have now, this is one scenario, you're going to get less loan forgiveness because you had a reduction in staff, but they still are happy and that you maintain the 15. This program, if you receive the loan before June 30th or by May 1st, let's say, optimistic, it allows you to rehire people and pay them. And then whatever wages you incur from the point that you receive the PPP loan or some indication from the bank that you're going to be approved for the loan, you can rehire those folks, and then those wages will be included in the report that you provide to your lender following June 30th. But loan forgiveness is not automatic. You submit the application, which, you know, Gigi has detailed there of a lot of the information. Some of this is even in the guide. I can assure you that most of the lenders, yes, early on last week, they weren't sure how to upload and maybe they were changing the forms. But now, the first 3 days of this week, they've become pretty consistent on the kind of documentation they need to require, because the SBA doesn't want inequities among lenders so that people say, well, I was asked for this, but this bank wasn't asking for that. They've got to normalize to a certain degree. So some of the documentation here, that, you know, verifying the full-time employees, by the way, they do not have to be full-time employees. What you need to do if you hire hourlies or seasonals is look at their hours and make them full-time equivalents. So if I'm gonna always use Gigi, Gigi, Maite, and I, because we're locked with LCF. If you had two part-time employees That's one full-time equivalent. And so based on the hours, you can add that on your payroll. Absolutely. You make them full-time equivalents because you pay them. I'm sorry, I have a dog here and he's too excited. You have, as Gigi said, proof of the state income, payroll, any filings. The bank will help you determine based on their piece what it is that you can do. But you absolutely have to make sure that your documentation is ultra clear. There was some conversation at the beginning because of the way the language was written. Can I use consultants? Can I charge any independent contractors that work for me and include them? No, they cannot. The application, the way it was written was confusing because it said full-time employees or paid independent contractors. That is speaking to the fact that paid independent contractors, and it was clarified, can apply on their own. So someone like me can go in and apply for a PPP on my own. So do not include any consultants or independent paid contractors, anybody that you have, even if you're paying them a retainer every single month, they do not make it into your application. So
including if you give them 1099s?
Yes, absolutely. If you include, you cannot include 1099s. We are allowed to apply on our own, and we have actually a date. Not that I'm going to apply, but just so you know, April 10th. That's when it opens to paid independent contractors. They're not considered an employee for the purposes of the PPP. So this documentation here is the stuff that you would give the lender. Gigi, can you go to the next slide, darling? Okay. So these are the commercials. Limited pool of dollars. You can apply for both. And she has here that the amount awarded through the emergency EIDP will be deducted from your PPP loan. So when you look at the paperwork, it's going to say, did you get something else? You add it in. And then when they, so for example, if I ask for $250,000, because that's my 2.5, 100,000 times 2.5, and I applied for the emergency grant, I add that in. So basically I'm asking the government for $260,000. And then when the bank looks at it, they go, oh no, you're going to get 250. The reason for that is the bank does not award you the emergency EIDL. That comes directly from the SBA. The bank awards you the PPP money. The emergency EIDL comes from SBA. And then she has here, forgiveness application should be done within 60 days of the submission. Okay, this is not, just so let me put some context because that's correct. But here's what happens. Let's say you use these dollars through June 30th or July 15th. Because it doesn't say you can't use it past June 30th. It says the program's only available to you through June 30th. And the reason I'm highlighting that is you're getting 2.5 months of your operating costs for that period. So it may extend a little bit past June 30th, the use of the money. You can decide to use it or you can decide to return it to the bank. Most people, I think, will decide to use it because it's only a 1% interest rate. You can still be forgiven for it. The bank, once you submit your forgiveness application, the bank has 60 days to let you know whether you've been forgiven or not. So this guidance is really important because what it's telling you is don't hold on to your forgiveness application. Once you fully use these funds, start working with the lender as soon as possible, get your documentation in. It should definitely be done within 60 days, but I'm actually hoping that you'll be able to work with your lender within 30 days or 45 days because you need to close out and get all your payroll records, right, on the use of the funds. And then they have 60 days to get back to you to let you know if you've been forgiven. Here's how the 1% kicks in. Let's say Maite, our board chair, borrows $100,000 and only uses 90 of it, she will have that 10,000 plus the 1%. She gets forgiven for 90. Maite, we're forgiving you for 90, okay?
Yay.
That 10, she can still use it as working capital for her organization. She has 2 years to pay it back at 1%. That's why you have it. If you wonder, you say, but wait a minute, if I'm forgiven, why do I have 2 years? Because sometimes not everybody will get everything in the loan forgiven if they don't meet those costs. So they can choose to hold on to those funds, meaning your payroll costs were less than you thought, or utilities were less than you thought. You can either work with the bank to return it, or you can use it and then have 2 years to repay it at 1%. So if you borrow $100,000, 1% is $1,000. Better than the credit cards. Gigi, can you go to the next slide, love? Okay. So this is just an example of the application. It's not very long. The application is basically 2 pages. It's going to ask you for your number of employees, your average monthly payroll. It asks you for the purpose of the loan. And then there's a lot of certifications, right? They want you to know that you weren't disbarred, that you're not illegal, using this for legal use, that you're the right applicant. And you know, when they refer to owner, remember, this is also a small business application. So you'll check off the pieces that apply to you. They're going to want to know, you know, if you're going to use, how you're going to use it and all this stuff. The application, honestly, guys, not difficult. It's the other side where you start saying, okay, do I have the corresponding, all the corresponding information that the bank is going to have? Some of this is all stuff that you would normally have, right? So your articles of incorporation, bylaws, you should have filed last year, hopefully. And let's just be honest, we're very early in the fiscal year. So this is the IRS form 940 and 941. If someone says, look, I haven't filed certain things, work with the loaner and see what kind of flexibility they'll have. Gigi mentions here's a payroll summary report. If it's not available, then you're going to have to work with the lender to kind of cobble together some form of a report based on pay stubs. And then, of course, you have the payroll benefits. So it includes all of those items. Vacation, if there's a retirement piece that you have to pay into through, you know, through, let's say, a 403B, that is your share, you can borrow that. And then you have to certify that, you know, and here's the difference between this and some other loans. Obviously, they want to know that all your employees live within the United States. There's another grant for really big nonprofits or companies that's in excess of 500, where some people are going to say, I'll give you an example, like Habitat for Humanity or CARES, that they have international employees, but they don't want you using this money to pay international employees. Here's the other thing. Both of these grants are focused on organizations that have 500 or less employees. 500 or less employees. So that's important too, right? So I don't think anybody on the phone is 500 or more, but it's 500 and less. And here's the other thing. Let's say you're an organization that only has 50 employees, but you are a fiscal conduit for another organization, another nonprofit, meaning you manage all their financials, you're paying their employees. You can wrap that organization into your application as long as it's not more than 500 employees and you can show that you have what they call parental control over that organization. And that's in the rules. And then at the bottom, Gigi mentioned some of the other things, the most recent mortgage statement with your interest costs, because remember, they're not paying your mortgage principal, it's the interest, your rent statement, and then your utility bills. And obviously you want to average them out as well. You know, electricity, gas, telephone, but and water, but I would say, emphasizing again what Maite mentioned, the majority of this is payroll, 75%. So if you change that equation, it's gonna affect your forgiveness. She's just giving you an example here of the 941s that you file quarterly that will help you collect the information and help you back out sort of some of the costs that you can't cover. Like I said, more of the sort of employment taxes on the federal level. And you know what your federal employment taxes are, right? The Medicare, the SUI. And then on the other side is a paycheck protection loan forgiveness calculator. Because what this allows you to do is figure out all your payroll costs and benefits. You can, I don't know, Gigi, we also in the guide that the Federation partnered with us on, and just Frankie sent his deepest love for you and said, please feel free to use anything that you know, they might have, because we're all moving very quickly on this. You're gonna add in, on the other one, it allows you to add in the rent, utilities, and any mortgage interest. And then it shows you, like this one does, what happens if you do have a reduction. So this forgiveness calculator becomes important if you have a change in your employees or anything else, you know, like any other cost, because then it's going to reduce the portion of the loan that is forgivable for your organization. And that's the importance of this. So what Gigi has done here, and I thank you, Gigi, and for all of this, is highlight, as you move through this application process, if you decide that you want to apply through your lender, here are all the watch outs around reduction in staff or reduction in wages. Because some people may say, I'm going to keep all of you, but I can only pay you at 80%. Certain nonprofits or businesses can do that, right? They can say, hey guys, during this very difficult time, can we keep all of you, but pay you at 75%? Well, if you do decide to do that as a nonprofit or business, a small business, then it's going to affect the ratio against the 100,000 you paid in total last year, and then the 75,000 that I'm going to pay you for the next 2 months, right? Or you get what I'm saying. I'm not doing perfect math for you. What I'm doing is explaining that it's not just a reduction in staff, it could also be a reduction in wages.
What if it's the other way around, whereby as a result of the situation on ground and staff, the few hands that you have on staff are working round the clock and also doing mental health counseling late in the night, and you decide now that you would rather increase by paying them some more money because they are working more than before? How do
you can do that, but you're not going to get PPP money to do that. And I'll tell you why. Because the PPP is based on the average monthly payroll for the prior 12 months.
Okay.
So if you show an uptick, meaning an increase in wages for your employees, that is great. And I know what you're talking about. It's deserved. There's been conversations about, should people be getting time and a half? Should people be getting hazard pay? You know, particularly in health situations, mental health and all that. But this money is just to keep the employees that you have and the wages intact. It's not to help you increase those wages. You can do that, but you would have to do that through your current existing agency funds, independent of this PPP application. Because when you apply, you won't have done what you're describing. You know what I mean? Like those increases yet. This is based on, the loan is based on what your current number of employees averaged out with those 12 months of wages averaged out. So I wouldn't recommend with a lender to kind of confuse this by trying to take or do something that's outside of the box. Make sense, Glory?
It does, but this that I said took effect April 1. That's why I'm asking the question.
Right. But your borrowing is based on the
Previous
prior.
year, you said, yes.
Last 12 months, correct, correct.
So it's not that it's laudable, and I commend you, and I've heard this conversation. It's just that whatever you do in April, May, and June, you may show an increase, and that'll be fantastic. But the borrowing is based on current, the prior year. So what that means is if you stay intact on the number of employees and you stay intact on the wages and you do the ratios properly, what we described, 75-25, you're going to be able to recoup 100%, and with the exception of the interest rate. So some people have asked that, like, oh, so if it's 100% forgiveness, it's the interest rate too. I like to remind people, your principal and your interest are two separate things. They are forgiving your principal. They are not forgiving the 1% interest. It's the principal. Just like when you make a mortgage payment, your payment's divided between principal and interest.
Thank you, Lil, so much for explaining us in detail all the PPP. At this time, everybody is unmuted, so we can answer some questions. I would like, though, to summarize what we have learned and clarify a few things. So for the PPP in particular, the first thing you need to do is talk to your local financial institution. Ensure that they are an SBA lender and confirm that they are taking applications and what is the documentation that you need. Some of the sample of documentation you saw in some previous screens, that's gonna vary depending on the lender, right? Some banks are requiring, a voided check and are requiring I-9s. Some others are just requiring payroll information. Every bank has a set of documentation that is requiring. We have provided what we believe it's mostly standard for nonprofits. So once you have your list, collect the documentation and apply, because time is of the essence. If this is right for you, meaning you do have a payroll and you have workers, W-2 workers, apply. Time is of the essence. We only have a specific number. There's only a certain number of dollars available. We have a few questions already in the chat box that I would like to present to Maite and Lil and see if they can answer. Rebecca runs with Delicia, Unidos Somos United, one of our member organizations in Rockdale and Newton County. They are mostly volunteer and a volunteer organization. So they are asking if they don't have any significant payroll, are there any options for them for economic relief that you know of?
Right, if they don't have any significant payroll and they have incurred some loss due to the current crisis, then they qualify for the economic injury disaster loan. That's what they would do. If they have incurred current loss of income or revenue due to the current crisis. What is the exact situation? We can talk offline, but that they will qualify for the EIDL. No.
And Rebecca, we will share again with you Maite's information. Some other questions, several organizations have questions about independent contractors that Maite answered on the chat box and Lillian addressed during her presentation. So they can apply directly to the PPP on April 10th. Any details you want to share, Lillian, for this particular question?
The original question was, should they be included as part of your payroll, your wages? And that's absolutely not. In terms of the separate application, it's going to be exactly the same application, but when you go to the lender, they're going to require different types of documentation, because at that point, as a paid independent contractor, you're being treated as if you were a small business. So there's other kinds of things that you're gonna have to apply. You're gonna have to prove, first of all, what's your economic loss? Do you have a profit and loss statement? All of that stuff is yet to be fully determined for the independent contractors, because obviously it's not up yet. That's why we have, I think, until April 10th. So that would be, I guess, Friday when it's supposed to be uploaded. But I would go and visit, the site, SBA site on Friday and see what gets uploaded. Or if you do have a financial institution, because remember, this is the thing that we didn't mention. A lot of the financial institutions are giving preference to their customers, to their small business and their nonprofit customers. So that's why when people, it's really important to go to your local financial institution. If your institution is not SBA authorized to do this, then some people are going to other lenders, makes it more difficult, or they're going to community lenders, right? And seeing what the community lenders can do for them. So it's not that it doesn't take some work and some research, particularly if your bank is not doing it. But everything and every indication yesterday was that, Gigi, are you on your Mac? Because it's using significant energy.
Yes, it is using significant energy.
Closing it may improve. It's not that it's easy with your lender, but it becomes even more difficult if your lender is not an SBA approved lender for the purposes of the PPP. The EIDL, you can go in and do it directly on SBA. And like I said, we all said apply for that up to 10,000, but the up to 10,000 is still based on, you know, the number of employees you have. So it's going to be more difficult if you are a volunteer driven organization because it's a paycheck program.
Yeah. A couple other questions that people submitted in the chat box and that have also submitted online. One is a question about unemployment. So you can apply for unemployment insurance if you are an employer, right? That is also a program that's available. That's state, that's Georgia based. So you can apply for that. And then another question was an ownership question. So I am in, several groups of executive directors that are, all supporting each other through this process. And one of the questions that everybody has is the ownership question. There is a portion in the application that requires for the person signing to share how much of ownership they have. So nonprofits is 0 because it is a public charity. Nobody owns a nonprofit. However, I will share that in some digital applications for some lenders, right, organizations have been instructed to write 20% at the beginning and then it corrects on the next screen. So again, this is why it's important to talk to your lending institution and understand what's the process to answer that question. But the correct answer is 0. And the majority of applications should allow you to move forward with 0% if you mark that you are a nonprofit. Any other questions?
That's good. Gigi, if there's no other questions, I would like to share my personal experience with the Paycheck Protection Program because as a business owner, of course, we applied. We had to let go of our employees, and the only way to the last Friday was the last time we paid our employees, even though they hadn't worked for 2 weeks. But we want to retain the employees because our business is located in a rural area of North Georgia, and there's very limited resources in this area. So I applied with a bank that was not my bank. Unlike most people should go through their lending institutions, I chose not to go to my lending institution only because I had a really strong relationship with the financial institution that I chose to apply through. The application was simple, like you saw and Lillian explained through the slides here, a very simple 2-page application. And then they got back to me and asked me for additional information, which was just a couple of clarifications on my 941s, which I knew I could provide them through your payroll company. You should be able to get that. If you don't have those currently stored somewhere, you should be able to request that from the payroll companies. They're very willing to support you through this. And also they asked me for a list of all the employees that I had. And so that was just, I wanted to share it was a very, basic information, not like your typical loan, very involved. So you be prepared to provide a list of all your employees and how much they're earning per year or per hour if they're hourly employees. and have that ready for the bank. Then later on, 3 days later, they called me back and said that I was approved, but I don't know what that means because I haven't seen any documents. So like you said, we talked about before, you know, this is an ongoing, moving and evolving situation. So I only have 5 employees, so the request was small, but and I don't have a mortgage or a rent in my space, so that was good. But I just wanted to share with everybody that, you know, because of my existing relationship with my financial institution, I was able to move my application quickly through it.
So just some perspective on that too. Gigi mentioned that I work and support a nonprofit. It's a very large nonprofit headquartered out of New York. Honestly, we're a little late in the game here, just so everyone on the phone knows. A lot of people apply Friday and Saturday because, you know, their lenders were open, they could work with their lenders, and even on Monday because they knew that there were some questions, but they just wanted to make sure that they got into the system, and they also knew that the lenders would ask them for different things. So even if the documentation was not all available, as Maite was saying, they can always come back and say, give me A, give me B, give me C. They were approved yesterday. They got notification that they were approved from the bank, and they also received some number or something. I don't know, Maite, if you got that as well. They received it because the lender flipped because once the lender approves you, they still send your information to the SBA. So, you know, they're very happy because they, like I said, they are a very, very large nonprofit, and they were applying majority of payroll too. And, you know, for them, it's $933,000, close to $1 million that they can get that will be forgivable. So it may not be the case for everyone here. So you have to kind of assess what makes more sense. Do I want the EIDL? Okay, also, do I want, you know, the PPP? There are certain other tax incentive programs that are available to you. There's something called the payroll retention tax credit. It almost kind of works in the same way the PPP does, but in the sense that the PPP gives you dollars to pay now, the employee tax retention credit gives you a 50% credit on all wages and benefits paid. So it's kind of like, give me the cash now so I pay, or give me a credit and then, you know, I gain it in my tax payments through the IRS. But you can't have both. So there are big organizations that will say, I want the payroll tax credit, retention tax credit, because it's really worth it to me, or I'm going to go for the PPP. There's also, as part of that, a deferral for nonprofits of your certain employment taxes. So specifically your Social Security. So you collect it from the employees, you pay their portion, but you hold your portion. But that's not, that particular piece, the deferment, you're gonna owe it anyway. You're just gonna owe it at the end of 21 and the end of 22. So you're just holding on to that payment to the IRS now, but you're gonna owe it in subsequent years. And then, you know, you all have followed everything on paid sick leave and what's available to the employees through family leave or through the employee itself. And that's all related to coronavirus, right? So I don't have school, I don't have childcare for my child, I have the virus, I'm suspected of having the virus, or somebody in my family has the virus, and there's all these paid sick leave provisions that kick in, $511 a week, up to $5,000 in paid sick leave that can be requested. And on the unemployment, I'm sure you're all up to speed on that too. There's a 13-week add-on, ends by July, and it's an additional $600 per week for people who go on unemployment. It's in addition to what the state of Georgia will give you, but it's capped at a certain number of weeks. And obviously, honestly, that's why the payroll protection program was put into place. They are trying to avoid on a federal level that everybody moves into unemployment. It's better to have people employed, and it's better to have all of, you know, our very important nonprofit and small business organizations sustained somehow in this critical, economic situation that everybody's finding themselves in. So, that's all in that guide that Gigi mentioned. It has the information on unemployment, it has the information on paid sick leave, and it also has, some of the tax programs. I don't know, Gigi, thank you everyone. I don't know if there's any more questions for me.
Yeah, there are a couple of, there is another question. The question, this is a interesting question. It's from approval time. How quickly are funds then deployed?
So you're saying at what point does the lender approve you and then you actually receive the funds?
Correct. So when you receive approval, how long since you receive approval for
that is not, that's not set in stone. We're seeing, I mean, imagine there's no way to know that. The applications just opened on Monday and there's nothing in the rules that say payment must be issued within 14 days or 21 days. So that's really working with the lenders. As you can imagine, they're all really thinking about, these loans, even though they're secured or guaranteed by the federal government, they still have to manage their assets, right? And I'm not in banking, but I know this for sure, and their cash situation. I'm hearing 2 to 3 weeks before money comes in.
I was approved yesterday. I got the phone call from the bank and was told that the loan was approved by the SBA. They are still waiting for the SBA to provide documentation. So they did not give an exact timeline when we will receive the funds. So I think that, that is also something that is a moving target because of the volume of applications are put into the SBA system is an overload right now. And also the bank is overloaded. Frankly, the bank said that they closed applications the day before yesterday because they could not handle the volume. So, yes.
Thank you for answering that. That was my question because you have different non-for-profits that are in various situations. And this is a blessing. However, some folks won't be able to make payroll if there is no definitive or approximate date by which the funds will be deployed. If not, it will come later. Like I said, everybody's situation is totally different, but just kind of wanted a framework or a scheme, but it's a question mark. So folks just have to, I guess, plan appropriately.
Yeah, there's nothing. I mean, every time you read an article or you say people are saying they're hopeful that they'll move that first group of money between 2 and 3 weeks, but there's just no guarantee on,
Right.
And of course it depends on the lender. Each lender will move as, differently.
Right.
And I will be glad to share my personal story as it evolves. I'll be sharing with Gigi and she can share with you guys to give you some kind of idea, but definitely really, you don't need to wait to apply just because you don't know when the loan might be funded. This is like Lillian has said and Gigi has said, time is of the essence. And if you feel like you qualify for these funds, go ahead and apply with your lending institution or find one that is accepting applications.
Right.
Do you guys have suggestions of the ones that are accepting applications from nonprofit organizations? That might be helpful because I'm looking forward to receiving all these materials from Gigi so I can go ahead and begin the application process.
You need to start with your bank first. Okay. That would be the #1 thing to do, is to start with your bank. And again,
I'm happy to send a list of SBA approved lenders that we have, but again, you have to check if they are taking the applications, at the moment first. And, they are going to vary. And like Lillian mentioned, the preference is for banks simply because of their capacity, their own capacity to serve their clients first.
And don't disregard your credit union. Some credit unions are doing the PPP loan. So I had a friend of mine call me and told me that his credit union is helping him through the process. Other institutions like Cabbage, which do more of cash advance loans to small businesses, are also helping. I don't know that could help in the nonprofit sector, but would definitely something to consider. Other banks that were mentioned to me were Renaissance and Ameris Bank. It's worth a call or an email to check out. If your banking institution is not helping you, you can reach out to them and see how someone might be able to service your loan.
Thank you so much. I'll check. I bank with Bank of America, but they are the last we recommend for housing loan because they have never been good with mortgage.
Well, but they're one of the approved SBA
Yeah.
7A loan banks. So,
Mhm.
and some of the other banks shut down the application process because they're assessing how much asset capacity they have. And by quite frankly, some of them, their systems crashed given the number of applications that came in. Or they've reached their caps. But I mean, you should go directly to Bank of America and see what they say. If you have a relationship with them, particularly a business banking relationship for your nonprofit, and you should insist that they move on your application. Even if they say, well, we're not sure we have enough funding now, I still want to apply because of the possibility, because of the possibility of there being additional funds through the end of the week.
Okay.
Once they vote.
Thank you. Helpful.
Any other questions? Yeah, so Judith is sharing that, you know, her bank is Wells Fargo. Judith, that's our bank too, and they are not taking applications at the moment. We do expect that they will resume taking applications shortly. But again, there are other financial institutions that may be able to take you. I feel pretty confident that Wells Fargo will reopen soon. So we just need to keep checking. Any other questions, ladies and gentlemen?
No. Thank you, Gigi, for putting this together.
Thanks,
Of course,
Gigi.
of course.
Thank you all. Thank you. Thank you. This was really helpful. Thank you.
Thank you. This is recorded. So how can we watch the recording again? How does that work?
So what I will do is you all registered. Thank you very much for following the instructions. And I will go ahead and send you the presentation via email. Okay. And I will also send you the link to the recording. The link of the recording is going to take a couple hours because we need to download it and store it. But I will share all the materials with you, you know, hopefully within the next hour.
But I ask, may everyone be successful in this process and may your good works expand for everyone.
Amen. Thank you.
Gracias. Thank you very much for everybody join us. Thank you, Lil and Maite, for your time and expertise. And you will hear from us soon. Thank you.
Thank you, Gigi. Much respect. Thank you.
Thank you.
Bye.
Thank you, everybody.
I'm going to call you.